G'day guys, it's Jake here. Nothing in this video is financial advice. Please do your own research when it comes to investing. Please be sure to check out my links below, including exchanges I use and social media content that I post. Alright, let's go. So the topic for this video, we'll be going over the stock market and particularly NVIDIA earnings that came out last night for me. Well, early in the morning, I should say, really early hours. And I was sleeping, and last night's session. So the earnings come out, and also talk about some other tweets. Talk about what Berkshire Hathaway, what that achieved in the session. And we'll go over my own charts as well, just tracking where the stock market is and some other stocks. Okay, so that is the video. So first up, we have the fear and greed. And we're at neutral, the fear and greed. We go to a timeline, we're sitting around the 50 level. All right, so right in the center, and we haven't done much since May. And you go back to 13th of May. And even further back than that, you go April. It's really just chopped sideways, and then you go, it goes back to obviously end of 2023. We're at neutral, but you can see this trend. So you can see the highs up here, extreme greed, 82. We've got 79. April, and then it got lower, 69. We had a trough here, mid-April, 30 to 28. Then May, 63. And then we got a little higher low, than this one. So higher low in June, and then a lower high in July at 58, and then a lower low, that big sell-off with the Nikkei and all the rest of it, the Japanese carry trade. Extreme fear at 17, and then sort of crawling back up and creeping our way above neutral, but we're staying flat as we stand, and so nothing really exciting to report on the fear and greed, and it's just a downtrend at the moment. So that is where we're at with the fear and greed index. Okay, for that one. So tweet by Benjamin Cohen. Now this is an interesting way to look at the S&P 500. TradingView formula in case you want to reproduce it. So it's this S&P 500 divided by the unemployment rate, so twice, times the US inflation rate year over year, times the US interest rates. Okay, as you can see, this really complex formula. You type into TradingView and it identifies bubbles. Okay, so click into the chart. On the monthly time frame, you can see going back to the mid-70s, we had that big crash. Okay, it was a very long, brutal crash, 50% or so crash in the stock markets. And then we had another one in the early 80s, a crash, and then up, and then a crash, essentially. And then we had it again in the 1990 recession. Okay, and then in the dot-com bubble, right here, 2000, we bubble and went right back to this yellow. It's important to note this yellow horizontal support level, or just level in general, 0 level, and you can see that the market has come back down there. As you can see, touch. And we obviously trended like this flat for a while, from 2009 to 2017 or so. So that was the 2008 financial crisis, of course. And we had a crash here. We had the COVID crash. And then, boom. It just skyrocketed up since then. Just been going parabolic. And we've corrected a little bit. But you can see this is it's the biggest bubble. It's the greatest bubble of all time. You can't go back to the 1920s from this chart, but that was a big bubble too. But we're in a huge bubble, way surpassing these ones, according to this chart. So hopefully it's not going to be too bad of a crash, but it's definitely pretty alarming to see how much of an increase, and you can see that relatively, these are relatively similar, except for the dot-com bubble was much larger than these other ones, but these were very similar in size to 70s, early 80s, 90, and then 2008, and then 2020 or so. So, or 2000 going into 2022, flat from that point on to 2022, and then we shot up, of course. But It's a massive difference between all the other ones. So very, very interesting chart there. Next set of news on Twitter is from the Warren Buffett Stock Indicator Tracker. And breaking, Berkshire Hathaway just hit a $1 trillion market cap for the first time ever. So it's the 1T club. And yeah, pretty great. It's number 8 now, just outside the Magnificent 7. Good old Warren Buffett's Berkshire Hathaway. And it just shows this guy is an absolutely incredible investor over the long period in the 50s. Now he's had a 20-something percent, I think 22 or 23% annualized return, going back from a long, long way. So this guy's absolutely crushed it and deserves it. Get into almost in the top 7, but you don't really count Saudi Aramco in the Magnificent 7. It's more of an outside the US company. Okay. But the rest are part of the Magnificent 7, of course. And Berkshire Hathaway is not far off getting in that club. So it's very, very exciting for Warren Buffett and his company. And it's, good on him. Great to hear. Another one, Warren Buffett news. Just in, Warren Buffett sold another 981 million shares of Bank of America. Buffett now holds $278 billion in cash and selling stocks like never before, including Apple. He's getting ready for a crash. And yes, he's keeps selling more and more shares. And his beloved Bank of America, he's been investing for a long, long time. And yeah, Apple was his biggest sell this year. He sold basically 50% of his position in Apple, worth a lot of money. Don't tell me the exact figure, but it was a lot of money. And now he's sitting in on around $278 billion in cash. So he owns more treasuries than the Federal Reserve. So that's how much worried he is from the stock market, and he's going into the bond market because he reckons there's undervaluation there, and the yields are quite high and it's quite juicy to grab a good yield. And he can lock that yield in for a maturity date in the future, and when the yields drop, the bonds go up, so he makes money on that. So he's a very, very smart guy. Obviously, one of the greatest of all time, really. You can't doubt this guy. His track record's just unmatched, especially the time period from the 50s to now. Like, no one's at that track record of 20+% per year. So very consistent. NVIDIA Corp. So NVIDIA earnings just came out, and actually it went down 2% in the session, and in after hours it's down 4.5%. On pre-market now, 4.5%, so quite bad. And because of the earnings result, and the EPS bet by 5.65%, and revenue bet by 4.5%. So only just bet slightly. So it's not a very, very exciting result. So that's that data, and they expect it to beat by a lot more. So it's got very, very close to estimations, and that's why I think people seeing that the growth is starting to run out in NVIDIA, and the AI craze is starting to come to a close, and it's just too many promises. I think investors are seeing it's just the value of it's just too high, and they're just taking profits. Or traders just getting in and out and just trading the news, either. This big sell-off now, but I see this company pretty much, I don't know how much higher it can go. I don't think it's got much room left. It's pretty well topped already. I don't see it breaching the all-time highs. So that's for NVIDIA. As you can go to the yearly chart, you can see you can go up there. It's around $135 because we had a stock split. Okay, it's over 1,000 a share at that point. And now it's only 135, and right now it's 125. So not far off the all-time highs. We could wick it, but yeah, it's. I think the momentum's over for NVIDIA. It's had a great run, and I think it's over. It's up 157% in a year, which is quite staggering for the size of the company. And yeah, it's $3.1 trillion market cap. So it's a big beast that's ready to be tamed. And just quickly, we'll just touch up on the stock market, going over S&P and the NASDAQ, and we'll go some stocks as well. Okay, So as you can see, go on the daily, you're seeing a bit of consolidation here. Up this rising wedge has been tracking from the correction in basically Q3 to Q4, Q4 roughly, start of Q4, and then it shot up after that, and up to here in March this year, corrected April, and we actually came up in July and broke this rising, you can call it a rising wedge, or it's like a backwards wedge essentially. So it is what it is. It's a big sharp even triangle, if I call it that as well. Up to you. And it broke it. We come up, and now we're coming back down. Okay. Touch this trend line again. Okay. It came back, rejected, and then big sell off into early August, and then shoot back up again. We breached this level. I thought we were going to reject, but I was wrong about that. We did go a bit higher. But will we break the all-time high? That's the question everyone's thinking about. Well, this is going to be just the last bit of gas before we get a big sell-off. All right. So that's the S&P 500. If it does grind higher and the crypto market goes lower, it's not the first time it's happened, okay? It's happened in 2019 as well, okay? So, yeah, if you see one market going up and the other one going down, it's because of the Fed monetary policies. And what's happening is the higher risk assets are leading the lower risk assets, which is obviously the S&P, the lower risk asset than Bitcoin in the crypto market. And that is that. So I'll just quickly show you what I mean by that. US interest rates. And, as they stay flat, okay, they've been rising up and then they start going flat. And then obviously the market does really well in this period. And then you go back to, I might actually put it on the weekly, so it's a bit easier to see everything. It's all in one go. And then in 2019 or so, you see you had a flat period, and then the market bottomed December 2018, and obviously the market rallied, nice flat rates, and then they cut the markets. Even though we had cuts, all right, and the Fed saw weakness in the banking sector, the market still kept going. And we had a pause, okay, and then the markets obviously rallied further. Overlaid Bitcoin. Bitcoin. And as you can see, we'll leave it in purple. That's fine. Actually, we'll change the color. It's a bit hard to see. And make it orange for Bitcoin. And in 2019, after the Fed cut rates right here, Bitcoin pretty well topped. Okay. And then it just, after cuts come, Bitcoin prices went down. All right, went down. Meanwhile, the S&P was going up. Okay, the S&P was going up and Bitcoin was going down. And the last gasp here, and these flat rates came, Bitcoin did rally a little bit to catch up to the stock market, but boom, had a big COVID crash, of course. So there was decorrelation there when the S&P was going up and the Bitcoin market was going down, crypto market. And right now, is we're seeing Bitcoin go down, okay, as you can see there, and the S&P is going up. All right, I'll just change the color so you can see it clearly. One goes up, the other one goes down. So there is similar things happening. Is the stock market and the Bitcoin price is diverging, and I can see this divergence playing out a bit longer if the market continues to break all-time highs and go higher. If it doesn't and collapses from here, then they're both going to go down. I think Bitcoin can go up or the S&P goes down. That never happens because it's a high-risk asset compared to the S&P. All right, so I just want to show you that comparison, those two. And yeah, let's get rid of these drawings. So that's what I see the S&P. And, what's happening, you can see it consolidate and trade sideways for a bit. But when the Fed cuts rates, I think there's going to be some interesting moves in the market, very volatile moves. And most likely to the downside because of the incoming recession. I mentioned in previous videos, but yeah, that's definitely a certainty. And you see the NASDAQ daily, similar sort of price action. Okay, you had this upwards, it's more of an upwards channel. Okay, so price did correct in 2023, shot up, came down April, and then shot up in July, and then broke it. The S&P did, and then we come up, Now we're consolidating and we're resting on this trend line. So very, very pivotal for the S&P and NASDAQ to see if they can hold and go higher or not. And we've got the stocks. Microsoft down 0.8% on the day. Okay, after we come down and then we come back up, will we break higher? This big trend line here going back from 2023, early January there. And we've been respecting it here, and then we've broken it finally and came up, and then we're starting to sell off. So very concerning signs in Microsoft. Apple, it's sort of a similar story, but it's a bit higher than its trend line. Obviously, it's bottom trend line. So the pandemic crash to December 2022, sort of breached it there, and then we had the 2024 April. Now we've been shooting up, and we've broken this upper part. Okay, as you can see here, 2021 highs, the 2023. And yeah, we've broken it in June and going higher, and then it seems to be a bit stronger than the Microsoft chart. And then you've got NVIDIA as well. We'll finish up on NVIDIA. Okay. And it's parabola. I can't even say probably parabola. Parabolic trend. This big curve, and we've been respecting it. Okay, touch. Breakdown in August, of course, when the market had a panic attack, and it shoots back up. And then we're consolidating, and then you can see in pre-market we are down and back testing this sloping curvature to head lower. I don't know if it's the end of it. It could be the end, but no one has a crystal ball, so we have to sit on the sidelines if you're not invested and wait and see what happens. It formed back in October of 2022, touched here in December 23. April this year, and then so it's looking quite aggressive, this move, and I do think it's coming to it's coming close to the end. I think the narrative, the AI craze is really just starting to die off, and it's just the cost factor of it, and it's too early stages to really call it to be the start of the next era. I see a crash in the markets before it really does settle in, and every company in the world is using AI and it becomes a revolutionary tool. At the moment, it's not quite there yet. Okay, it's got a long way to go, and it's just a precursor to what can really happen in the long term. But in the short term, it's bearish for these stocks. And you got Google, okay, as well. Again, the list you can see down 1%. Amazon's down 1.5%. Meta's down 0.5%, and Tesla's down 1.65%. Okay, so these are those stocks, and price analysis on those ones. I hope you enjoyed this video, just going over the tweets by some people, and Warren Buffett's Berkshire Hathaway reaching $1 trillion market cap, the first time ever, which is quite exciting. He's now ranked number 8, and also selling nearly close to $1 billion worth of Bank of America Corp shares. We touch up on the fear and greed index being at neutral. We also looked at NVIDIA and its earnings to see where that is tracking, and seeing that it's just beat, so it's not by much, and that looks pretty concerning. The growth is not keeping up with the hype and the sustainability of the earnings revenue. And then eventually the price will come back to where it's, should be valued at, because the company's way overvalued. And eventually prices come back aligned with what the investors expect. And it'll come down, and the higher it goes up, the higher it drops, the more it drops. Okay, that's how it works. And then we took the stock market charts as well. So those are what we're going over. And if you liked the video, please smash the like, comment your thoughts below, subscribe to stay updated. Be sure to check out the links below, and I'll catch you next one. Cheers.